Today's topic, continuing our S-corporation series, is estimated taxes as an S-corporation. How do they work? Hi, my name is Tony Cameron. I'm from TLDR Accounting, and today we're going to talk about S-corporations and estimated taxes. So if you've been a business owner before as a single member LLC or as a sole proprietorship, you know that each quarter you need to pay in an estimated tax payment, and it isn't quite on the quarterly schedule. It's a little bit more complicated than that since the government's their schedule is not a calendar year end, and so they want their money sooner. So Q1 taxes are due April 15th. That's easy to remember. Q2 taxes, though, are due June 15th, and they're based on April and May. And then Q3 taxes are actually due September 15th, which is June through August. The last 4 months are then due January 15th. So we have April 15th, we have June 15th, we have September 15th, and then we have January 15th. And those are the dates that, as a small business owner, not even a S corporation, but anyone who is either self-employed or small business owner, they need to make their estimated tax payments on those dates. So as an S corporation, what changes? As mentioned, reasonable compensation. So now you are receiving a W-2 for your salary from the S corporation. With the W-2, you do have some federal withholding, which should be covering your W-2 wages. In turn, that's going to leave whatever pass-through income is left to be taxed at your ordinary tax rate. And that's what your estimated tax payment is going to have to cover. Now, if you increase your withholding on your during your payroll, because you can change your withholding, you could put an extra amount aside in each of your paychecks, you wouldn't then have to pay estimated tax payments, which is what plenty of our S corporation owners do. They increase the withholding on their paycheck, and then they just forget about estimated tax payments since they're covered. Now, if you don't want to do that and instead you want to estimate your taxes with actual, you then have to make sure you're keeping track of your income and expenses each month, so then that you can make an estimated tax payment on how much money you actually earn during those time periods. And that can be a little complicated, so the IRS does provide a safe harbor. So safe harbor is so you don't get hit with the penalty on late payment of taxes or any interest on those late payment of taxes. Safe harbor, what does that mean? So if you pay in 90% of the taxes you owe, you're good. So it's currently 2019. If I pay in 90% of the taxes I owe for 2019 between my W-2 withholding and my quarterly estimated tax payments, I'm good. The other option is, if you don't want to calculate it based on 2019, which is the year that's going on, you can look at your prior year tax return. Now, as long as you pay in 100 to 110% of the taxes owed on your prior year tax return, that is also safe harbor. So again, you would pull the federal withholding on your W-2 and then your estimated tax payments, and if that's 100% or 110% if you're making a boatload of money, then you're good to go and you fall under safe harbor, which means you won't get hit with late payment of taxes or interest on it, which is great because no one wants to pay the IRS more than they owe. So as mentioned, the two ways that you pay in taxes as an S corporation owner is withholding on your paycheck and then estimated tax payments, which are due April 15th, June 15th, September 15th, and January 15th. I hope this was helpful. If so, subscribe below to our mailing list where we send out all sorts of information, or subscribe to YouTube and you can get our video updates.